Welcome to Upticks. I'm Jake Falcon.
And I'm Corey Bittner. We're the founders of Falcon Wealth Advisors and your co-host for Upticks.
Today's our 48th episode, Timely Events.
We're talking about the Secure Act, the current market, and questions worth asking.
Okay, Corey, for our financial planning topic of this week's show, you wanted to discuss kind of what's going on in Washington, D.C. around financial planning and the Secure Act. So why don't you kind of kick us off to what exactly potential implications there could be if this act gets passed?
First off, the Secure Act stands for Setting Every Community Up for Retirement Act. So that's what it stands for. That's secure.
But isn't secure spelled S-E-C-U-R-E?
S-E-C-U-R-E. Setting Up Every Community for Retirement Act.
All right.
So some of the letters are mixed up, but it's the government.
It's
So anyhow,
Washington.
yeah, exactly.
Yes.
So the Secure Act is something that was passed through Congress here recently. It's a bipartisan issue. It was voted 417-3 in approval of it. I'm going to mute that so it doesn't happen again. And anyhow, it's something that both parties agree with. Now it has to go through the Senate. Then it would get to Trump's desk. The expectation is it gets signed into law this year. But anyway, or by the end of the year. What it actually is just changing some of the rules around retirement and retirement accounts.
Real quick, let's slow down a little bit. So
Okay.
where is it in Congress right now? It passed the House?
Yes,
And so now it needs to go on to the Senate?
correct.
And do you think it's going to pass?
Yes,
You do. And do you
do.
think Trump is going to sign it?
yes.
Okay. So why don't you talk about what are some of the potential implications if this act does get signed?
Yep, so at a high level, and the stuff that would be probably most impactful to individual savers, individual investors, retirees and pre-retirees. First off, one of the biggest changes is that it is looking at changing the required minimum distribution age from traditional IRAs. So as we've probably touched on briefly before, when an individual turns age 70 and a half, or the year in which they turn that age, they're required to start taking money out of their IRA whether or not they need it, because
Right.
the IRS wants the tax revenue.
So what's the age going to change to?
72.
Okay.
So it would change the required minimum distribution age by 18 months. It's basically moving it up 18 months later. Additionally, it would be changing, and I think it might be looking at eliminating the maximum age to contribute to an IRA.
Okay.
So if someone's working at 70 or 71, they can still contribute. Next, it would allow new parents, this one is interesting, whether they had a child or adopted a child, to pull up to $5,000 out of a traditional IRA without penalty.
And the year they have the child?
I believe so.
Okay.
That's my understanding of it. And then two other impactful pieces of it. One more is it's going to change the stretch IRA rules. So the idea is for someone who's inheriting an IRA, it's going to cap the number of years that you have to pull the money out of there at 10.
Wow, so you have to fully exhaust an inherited account within 10 years?
Inherited IRA.
That's
yes.
a big one.
It is a big one.
So the ones you've rattled off, if somebody's 70 and a half and they don't have to pull till they're 72, 18 months, to me that's not a big deal. Our financial planning software will update and will account for it. They're
Yep.
just going to delay taxes about a year and a half, which is nice. Not real going to game changing as far as a financial plan is concerned. I get it if you have a baby and you need extra money that first year. Completely makes sense. I don't think robbing your retirement to help raise a child is a smart thing though. So I typically don't ever advise clients to do that anyways. So I don't really know why that's in there. But this inherited IRA thing, that could be a big deal because we have some clients that have inherited some IRAs and they only pull out that minimal amount every year. And they've been able to defer taxes for a long time. And if you're telling me that somebody inherits $1 million
10 years.
and they're going to have to pull out $100,000 a year and pay taxes on that, that's a big deal.
Yep.
That's potentially a big deal. I think that's pretty dumb on Washington's part to even put that in. What else is in there? Anything else?
Well, the other piece of it I think that's probably questionable at best is the fact that it is going to allow workers saving in 401ks to buy annuities within their 401k.
Stupid.
So the idea is it is yeah, I know. The idea
I know this isn't your act.
yeah, no, it's not. The idea there being that it's going to, the simplest way excuse me, maybe the simplest way to think about it is that if someone was going to retire, as opposed to rolling it over into an IRA and investing it or buying an annuity, people would be able to purchase annuities within their 401k plans, and then it would pay them a stream of income until, they pass.
I kind of get that, but that's going to make, the 401k world is already quite confusing as is. I listened to a really good podcast last night, and I think it was something staggering, like, I don't know, maybe 40%, or it might have been even as high as 70% of Americans think that their 401k is free, that they're not paying any fees.
Yeah.
And that's completely, typically untrue. I guess I can't speak to every 401k plan out there, but generally speaking, there are hidden fees associated with 401k plans. And then if you throw annuities in there, you're going to just tack on more fees in there. So I don't know, I'm not a big fan of what you've rattled off as far as the Secure Act. It looks like Congress is trying to help the insurance industry generate more commissions and also collect more taxes. Delaying the required minimum distribution age a year and a half is not nearly as beneficial
To offset.
Yeah, to offset the penalty for having to exhaust an inherited IRA. So I don't know. So I'm not for it. I'd be one of the ones that would have voted. I guess it's a minority though that not a lot of people are voting it. What do you think they're trying to accomplish by having this act in place?
It's quite frankly, I don't really know. I guess at a really high level, almost conceptually, like pie in the sky, they're trying to allow people the ability to annuitize their 401k. I think that
I get that. Like you're
premise,
creating a pension for people. So if somebody doesn't have an advisor,
yeah, exactly,
or they're maybe a little uneducated on how to properly diversify a portfolio, they know that they can just sock money away into this annuity, and they're basically creating a pension for themselves.
Exactly.
Which I kind of get that, but again,
all the other stuff,
you're layering on so many fees, and just opening up the insurance industry to just sink their teeth into people and really start ripping people off.
I saw somebody tweeted about it, and it said it looks like that they're trying to let the wolf into the chicken coop.
Yeah.
As far as allowing people to buy annuities inside of their 401k.
And I saw this, so this podcast I listened to last night, I was also talking about how that if fees in a 401k are 2% over, I don't know, a 30 or 40 year time horizon, that's the difference between having, I think, $2.5 million versus $1.5 million.
Wait, if the overall fee is 2%,
right?
2% per year.
Yeah.
Okay.
Right. So what they were arguing is that you can peel away some of those fees and lower them. You can't get it away totally, but my point is if you're tacking on more products in a 401k, that's just adding more fees, which is in turn eating away your retirement savings. So I guess the point of this is if the Secure Act does happen, it's critical or very important that you meet with a competent financial advisor who's going to be able to help you navigate these new rules and make sure that you are taking advantage of things that you can take advantage of, and that you're avoiding potential fees on some other things that are out there. And I might add that you would want to continue to work with a fiduciary. Don't go work with one of these brokers at a big bank, because I could just see it happening now. The big banks or the wirehouses, they're going to be the ones packaging these products and putting them into 401ks, or they're going to be encouraging their salespeople to go out and distribute their products. And so, again, that's one of, a big part of our jobs. It's actually a fun part of our job, is that as rules and laws change, you and I, of course, along with the rest of our team, stay up to date what's going on with them, and we help our clients make good informed decisions. And because we're acting as fiduciaries, we're legally obligated only to act in our client's best interest. So again, I read a little bit about the Secure Act also. Some of it sounds interesting, but again, I think you have to be careful. So if the rules change, it doesn't necessarily mean that they're going to change in your favor.
Exactly. And one of the primary reasons that I wanted to talk about this today was that, from an advisor standpoint and also from a client standpoint and the relationships that we have, we really can't use ignorance as an excuse.
Right.
I think last year there was a lot of people, if we remember last year when the tax laws changed, there was a lot of people that just sort of kept operating the way that they did, and then they were surprised come tax time. Mm-hmm. We're trying to get out in front of this and have these discussions. I understand that it's not law now, but the overwhelming response to it, and if you do some research to it, it's expected to go through.
What do you think it'll go through?
I was just reading this morning that the expectation is that it could go through by the end of the year.
Really? So you think these will be new rules for 2020?
Maybe.
Potentially. Interesting. So again, we'll of course keep all of our clients updated as this goes through Congress. Again, so we kind of have mixed emotions about it right now. We'll be paying close attention. I'm sure it may get edited or chopped up a little bit.
Right.
But we'll see how that goes. So again, that's one part of our show's theme today is talking about timely events, and this is certainly one of them that's definitely on our radar.
Yep. So, go ahead.
So for our next topic, did you want to say anything else?
No.
So for our next topic, we wanted to talk about what the heck's going on in the stock market. So the market was down approximately 6% in the month of May. Now the good news is for the year, it's still up over 10%. So we're still definitely having an above average year. But I wanted to talk about things that we're doing to protect our clients' accounts in this, recent market volatility that we've experienced. And probably one of the biggest things for our clients is that we're selling options against their stock positions to generate more income while we're waiting for the market to kind of figure out what's going on with volatility. So that's a topic for a whole nother show, but just know that one of the benefits of working with us at Falcon Wealth Advisors is that we are buying individual stocks, and there's some things that we can do to protect a portfolio by doing so. Now, a hot topic maybe that you can comment on here lately, and Jesse just wrote a blog about it, is that the tariffs, he's going a little crazy with these tariffs now on Mexico. So maybe you can comment on what's going on there and things that we're looking at.
Yeah, so as far as the tariffs go, there's been this ongoing sort of discussion or trade war, whatever you want to call it, with China. And then more recently, like you said, President Trump announced that they're going to implement tariffs on Mexico until they get the sort of border crisis, illegal immigration movement under control.
Which to me, and I'm going to weigh in here on my personal thought, I think that's really stupid. The tariffs have nothing to do with immigration. So by maybe you disagree, but maybe the tariffs, by making it harder for Mexico, that's not going to help them with the immigration problem. It has nothing to do with each other.
Well, I don't know if anybody's told the president that.
What are your thoughts?
Generally speaking, I feel the same. I feel like occasionally, this is anecdotal, but it feels like President Trump likes to just kind of lob hand grenades out there every now and then. Whether or not he is going to engaging in these discussions now to attempt to resolve them later to help, the economy and the market for his re-election bid in 2020, who knows? That could be part of this. I don't know. Whether he feels like that's the actual answer to illegal immigration, I would think he's smarter than that, but again, I don't know.
Well, and he also could be brilliant. I mean, if we think about it, Obama did his best to be diplomatic and negotiate with other countries in a civil way, in a professional way, and he didn't get much done. Mm-hmm. In fact, things are probably worse with China than they were before he became president.
I don't know.
So the idea is that maybe Trump is brilliant, and that the way to get through to these people is to bully them or to act a little, outlandish and, bold and brash and rude, frankly. And maybe that's how you get across to some of these people. That maybe that's what they'll respond to. So again, I'm not saying that I personally think he's brilliant or not. I'm just saying that we could look back on history and say, you know what? It was really ugly what he did, and the way he behaved was very unprofessional. But it got the job done, and that's what needed to be done. So it's kind of like ripping the Band-Aid, right? Yeah. So I don't know. I think time will tell. But I think it's a little... I don't know what he's doing. He's picking fights with a lot of different countries, which is a little alarming to some of our clients. And so, again, we're just watching that political landscape very closely. We're making sure that our portfolio is comprised of good quality companies that are going to be able to weather any type of tariffs or any storm. And we're watching. It's entertaining.
Yeah, no doubt. But to sort of just move that topic over here, though, away kind of from our takeaways and our political opinions more toward what impact does it, like you said,
Sure.
What are we doing for our clients?
Right.
The idea there is if we were trying to get all the way in or all the way out of the market based upon what Trump tweeted or what we think he's going to tweet, that would be stupid.
Right.
And while the market was up really, had done very well through April, and then it pulled back a little over 6.5% in May, it doesn't mean that you need to go and do something drastically different. We know that things don't go up in a straight line forever. Whether it has to do with this or does something else remains to be seen. But the point there is, we're not trying to, while we're aware of all of this and
Right.
we're watching what's happening, I'm not sitting here trying to say, you know what, Jake, I think Trump's going to tweet this tomorrow, so I'm going to sell all your stocks today. Because I don't know. That would be foolish.
Yep.
It's trying to time the market. So even if it feels like you need to do something, a lot of the times the best thing to do is nothing. And if you have a disciplined strategy where you're rebalancing and you're taking advantage of opportunities that present themselves on the upside and the downside, that's the best thing that you can do.
That's a good point. Yeah. So again, we will rebalance, but we're not trying to time the market. It's a fool's game, and you can't win that.
Right.
Because if you say, all right, Jake, I want to get out, I want to wait till all this settles down, then you've got to guess that correctly, and then you've got to guess correctly when to get back in. And again, we're not going to do that with our clients' capital.
Right.
So we are rebalancing. We want to make sure that the stocks and the bonds that we own are of high quality and that we understand why they are in our clients' portfolios, and then we're paying close attention.
Yes.
Another point I wanted to make is that the Fed here recently has commented that they may look to lower rates. Or I guess that's been hinted. I don't know if the Fed has officially said that. But the idea is because we have bonds, typically and our clients make up a decent chunk of their portfolios. If interest rates go down, bond prices or values will go up. And at that point, we will sell bonds and we will go in and we will buy stocks if they're low. So again, the last couple of years, I mean, last year wasn't great, but the year before, when stocks were doing really well, we were selling them and buying bonds. The inverse will happen. If stocks go down, bonds will go up typically, and we'll rebalance that way. So again, that's what Corey's getting at, is that we're not going to get all the way in or all the way out of any asset class.
Correct.
We're going to stay diversified. We're going to know the individual stocks and bonds that our clients hold, and we're going to pay close attention to it.
Yep.
And part of the reason, this is why we have a job. These types of markets are really when Corey and I earn our fees for our clients, because it's easy when everything's going up.
Sure.
A lot of times people will think they don't even need us, right? When the market's going straight up, we're not really adding much value. It's really when things get rocky and the market pulls back, and we help our clients avoid making irrational decisions. And really that's what we're here to do. So we're watching it. Again, we've got Jesse, who's our analyst. He's tracking everything very closely for us and doing research. And of course, if you have a question about the market or the economy or your individual portfolio, feel free to give us a call, and we're happy to go over that in great detail with you. And now is probably a really good time to get a second opinion. If your advisor has you in mutual funds or index funds, they don't really have much control probably on what's going on a day-to-day basis. It'd be a really good time to kick the tires and maybe take a second look and say, hey, what am I invested in and who's really watching it, and how do I know that my account is protected against these tariffs?
Bingo.
Yeah. So it's good. So it's interesting. And, again, it's something that we've been through before as far as volatility is concerned. That's part of being invested in the market, and it's just things you have to deal with if you want to make 6, 7, 8% returns on average. You've got to be willing to handle volatile months like May.
Yep.
All right, good. So now for our questions worth asking, do you have a question to throw at me?
I do.
For us?
Yeah, I had a client ask me this one yesterday, and his question was, I figure once I have $1 million, that'll be enough for me to retire. Is that right?
So, I think the media does a bad job of making it sound like you need $1 million or $2 million or $3 million to retire. The answer to that question is it depends on your financial plan and how much you want to spend. And so some of our clients retire with $1 million, some have $5 million. It just really depends on what they're looking to accomplish as far as their financial goals are concerned. So I would answer that question as let's take a look at your financial plan and let's plug in $1 million at retirement and let's see, based on the things that you want to do and that we've budgeted for, what that'll get you.
Exactly.
And that's really the answer to that question. But it's a good one. I mean, that is a goal, I think, in a lot of people's minds. It's certainly
understandably so.
Yes, absolutely. That's an amazing milestone. Something, especially in today's day and age, where the majority of our clients now are responsible for saving for their own retirement. I mean, some still get pensions, but that is going away more and more. And so, if you saved $1 million, that's pretty awesome. That shows that you've exuded self-discipline, that you've obviously had a very successful career. But to answer that question, $1 million doesn't always get it done. So it could and it could not. But we would just review the financial plan and take a look at it. Yep. That's a good question, though.
Yeah, I thought it was too, and that's what prompted me to bring it up today, because I explained how some people retire with half that. But again, it's all relative.
Right.
It's all relative to their plan. But it was also helpful, I think, for him to see, if you're continuing to contribute to your 401k at the rate that you are, all the money that you have invested already is hitting its target rate of return. Here's when we project that you'll achieve that.
Yeah.
Are you ready to retire then? Who knows?
Yeah, exactly. That's what's pretty neat about the financial plans, is that we can crunch the numbers and show you all of that on paper.
That's right.
All right, good. So for our fun global topic today, I wanted to share with our audience maybe something that you're reading or watching, or anything that any podcasts you've been listening to lately. Is there anything out there interesting?
Yeah, so I'm reading, and I'm getting close to finishing a book right now that's called Extreme Ownership.
Who wrote that?
There's two authors. One of them's name is Jocko Willink, and the other one's name is, I think it's pronounced Leif Babin.
Okay.
But these two gentlemen are both retired Navy SEALs. And they were kind of the commanders of a unit in the Iraq War in 2006 in the city of Ramadi, which was the most dangerous city in Iraq during that war. And they were they're the most decorated sort of unit and were considered to have had the most success in that war. And anyhow, they've come back and they've both since retired. I believe they're both retired now from the SEALs. And long story short, they've basically taken principles that they learned kind of on the battlefield and in combat about accountability and leadership and ownership, etc. And they've talked about how the book is divided into chapters that each one of them, they just basically took turns writing chapters. They talked about a concept. They talked about its application basically when they were at war, and then the application to the business world today, because now they've actually started a consulting group where they work with a lot
What's
of
a big
companies.
takeaway that you've had? What's a big takeaway so far?
I think probably the biggest takeaways are, again, the name of the book is Extreme Ownership, but I think taking personal accountability for your situation and circumstances, understanding that if people around you fail to see the message that it's not their fault, it's your fault. And, it's your responsibility as a leader. And anybody can be a leader. It doesn't have to be someone in a leadership
Do you think
position.
you were weak at that before?
I think I had room for improvement, definitely. And
Do you think you've improved?
I think so. But at times, I personally will kind of, take a step backwards or slip or fall into a rut here or there. But if nothing else, reading that and kind of reaffirming some of those principles, I do buy into it. I believe what they're writing. I am interested in it, and I think it makes a lot of good sense. But for me personally, it's one of those things where so many people struggle with accountability, and sometimes I struggle to hold myself accountable, or I struggle with you holding me accountable, or my fiance, or my family, or whomever
Sure.
it might be. But understanding that, my time here on this planet, and I am more in charge of my own fate than I maybe would have thought I was before. Some people feel like they're a victim of their circumstances. I feel like this is sort of taking the opposite approach to that.
Interesting. Good for you.
What are you reading or listening to?
I'm reading a book called Billion Dollar Whale, and it's been taking me a while to read it. It's a really good book, and I think it's taken me a while because a lot of the names are from the Middle East, and so it's weird. When you read a book and it's Tom or Jerry or whatever, it's easy to.
So keeping track.
But there's a
of
lot
them.
of different characters, and so it kind of just I read it a little bit slower because I want to absorb as much of the story as possible. But it's basically of this guy who's, I don't know, maybe you could call him a con artist. I mean, he's basically a modern day Gatsby, and he basically fooled all of these government banks and giving him money to invest, to quote unquote invest, and instead he went all over the world partying and blowing all this cash. And he's in his 30s. I think he's still on the run. So it's a true story, but it definitely reads like fiction. Some of the stuff that this guy got away with and some of the schemes that he pulled is pretty remarkable as far as the underhandedness or his manipulation or his persuasion or whatever he does to accomplish that. So it's a pretty crazy story.
So he was convincing governments to give him money?
Yeah, so he basically opened up this fund where he would, get government money to make these other investments, and then I think Goldman Sachs was involved, and so then you got all these private banks and to get all this money, and it was all just, so far it's all just been, it's a shell game basically. He's moving money from one place to another, and then somehow it siphons to him, and he's blowing it and spends a ton of cash on some crazy stuff, like crazy partying.
And he's like on the lam now.
I don't know where he is. I think somebody Googled it for me the other day. I think he's in China hiding or somewhere. He's somewhere where they can't get to him. I believe that's the current understanding. Wow. I think I'm on the third section. I think there's 3 sections of it maybe, and I'm on the third one, just starting it. So it's been a pretty interesting read. So if anyone's interested in that kind of stuff, it's a pretty popular book. I think a lot of people have read it. But I don't know, it's a pretty fascinating story.
I have kind of an embarrassing admission or question to ask, but what does it mean when you say he's a modern day Gatsby? I don't really know the story.
Have you seen the movie or So Great Gatsby basically was basically this young about to do person who I think Scott Fitzgerald wrote the book. I could be wrong Rachel would be laughing at us right now. But
I know.
I think I watched some of the movie, and I probably read it a long time
Okay.
ago. But I think basically, I think a similar deal is that he had this facade of all of this wealth.
But it was a
and he would,
facade.
I think so. And I think he was a crook. And it was a fiction book, but he would have these elegant, outlandish parties.
Right.
And that's basically why they're calling him
Got
a
it.
modern day Gatsby, is that he's having these outlandish parties, but it's not his money in there.
Hence the name. The
I
Great
think, and I could be,
Gatsby. Yeah,
and
okay.
forgive
All
us
right.
if we're wrong.
Yeah.
Rachel will
I was
laugh at me
curious.
right now, but that's pretty much the premise of it.
right.
But it's a good book. There's a lot of books on my list that I want to read after this, so I'm going to get through it. But it's been an enjoyable read. I need to pick it up a little bit as far as that's concerned.
What's next? Do you know?
I think Matt, another member of our team, wanted me to read a book about insurance and investing, which I'm not really looking forward to. But he thought it was interesting, so
Yeah.
he just wanted my viewpoint on it. I've got a client, Al Butkus, who is now a published author.
Nice.
He wrote
Yeah.
he wrote a novel called, I think it's called Woman in a Pinstripe Suit.
Mm-hmm.
So that's on the list. I've got a stack of them at home too. So there's a lot that I want to get to,
Yep.
and I'll be working my way through them. So we'll share kind of what we're reading with our audience. And as always, we'd love to hear your feedback. If there's any interesting books or anything that you're listening to or watching out there, you can find us on all the social media platforms. So please like our YouTube channel and share it. If you're listening to us on Spotify or SoundCloud or iTunes, thank you. You can also find us on Instagram. We're on Twitter. We're on Facebook. And we're on LinkedIn. And you can find me personally on Twitter if you're on there at Jake Falcon CRPC.
And I'm on Twitter. My handle is @CoreyBittnerKC.
Thanks again for watching, and we hope you all have a great week.